Hi, all. This is Akshara Menon, analyst at PMS Bazaar. Today, we have Mr. Rohan Mehta with us to give us a knowledge on Invest in India's turnaround business. It's been very long since we had this webinar. So before jumping on to the presentation, let's have a speaker's profile in brief. Mr. Rohan Mehta, he's a CEO and fund manager of Turtle Wealth. He co-founded Turtle Wealth in 2012, and in 2019, the company received SEBI license, and he became the fund manager of two PMS funds. He's one of the youngest fund managers in the country. In addition, he is also an author of the best-selling book, 212, The Complete Trade. I had a chance to glance through the book, which has created more than 21% C.A.G.R returns over the past decade, managing assets worth over $100 million. Furthermore, he is also featured in Forbes magazine India 2021 and trained over 1 lakh people on financial literacy. To talk about his qualification, he has done his MBA. Rohan has 16 plus years of experience in financial industry. He also appeared in several medias like CNBC, Bloomberg, Times of India, etc. So moving on to the audience, I just want to give us few notifications that do not ask any stock-specific questions post the presentation. And second thing, please put your questions on Q&A box and not on chat box. Thank you. And Rohan, the podium is all yours.
Yeah, thank you, Akshara. Hi, good evening, everyone. Good afternoon, and every part of the world you have been connected with. I'm Rohan Mehta, and I'm privileged to be part of PMS Bazaar, one of the team where we both have grown together. I was just telling Daniel the other day that, Daniel, it is so good to see your company growing and we growing eventually together. And we both are embarking our, highs into the financial world. So guys, as Akshara had given our brief profile, I'm extremely passionate about equity investments, and my life has been into equity investment from the time I understood business. And time I understood, I can forget people's name, I can forget people's maybe surname, but I could not forget people's business. And that's what I have been made up for. Maybe I've been very privileged to, look forward for into investment. I have something unique to offer people of India. So when we talk about investments, we have crafted our own research methodology, which is very unique to any other PMSs which is available in India. Every PMS has its own beautiful thing, and we have our own thing. And for us is U-turn, that is turnaround businesses and thinking which is beyond profits. So it's not only profits which creates wealth; it's about wealth, wealth and investing into turnaround businesses. So today's presentation, I want to give you an approach about my research methodology and process, how we invest into the companies, and what is our extreme core way of investing, which is the most simplest but most unique way. So when I started my career, I had read more than 800 books, and there was one anecdote which someone shared, and that was very beautiful. That if your strategy doesn't pass McDonald test, your strategy is too complex. Now, what is McDonald test is that your strategy has to be so simple that if you tell this strategy to a teenager, he or she can do this strategy very efficiently, at least 80 to 90% of it. And you don't need a financial jargon to do it, because as simple as the strategy it is very easy to execute it. The more the complex the strategy it is good to talk with on that strategy, but it is very hard to execute on that strategy. So I'll take you forward about investing into it and how the process works, and I'm sure you would love this 45 minutes is going to be one of the most better return on investment and return on time invested 45 minutes you have ever done. So on first, because we are to SEBI registered RIA and now PMS, so we, whatever we are discussing is for knowledge purpose, and before investing in any point, you should meet your fund manager or financial advisor, and this is just for knowledge purpose and giving you a point. There is no guarantee and assurance for it. Second is, we'll start a bit about my company. Our vision, our mission is for giving an amazing investing experience with growing your wealth 10x in 10 years by investing in outstanding businesses with bottom-up approach and robust risk management system. Our core value is probity, that is following integrity, discipline, and being trustworthy. Top 5 reasons we are doing amazing is five. We're managing roughly around $100 million assets across PMS and another asset side with 250 plus family globally. We are one of the very few or only company who invest into human friendly businesses, which are comprises of no animal killing, liquor, tobacco, and investing into only sustainable businesses. We're purely a process oriented PMS, which client knows that this is the why this stock is bought, the reason, and why this stock is not bought, the reason. We are the very few or only company who decides exit before we enter a stock, and this has been told by the research reports we send when we buy or sell the stock. Okay, sorry, we have endeavor to create 10x into 10 years. I'll tell you why 10x into 10 years are very important for us. So whenever you choose a PMS or a fund management company, 5 P's are very important for you. One is the portfolio management team. How is the team made, and what is the vision of the team, which comprises 10% of the allocation. Philosophy and processes are 70%. Performance is rather 10%. Price is what you're paying to the fund is 5%, and product is 5%. Ironically, when somebody asks me about investing and stuffs like that, people ask me the highest about performance and price, and rest people don't ask about philosophy and the processes. And that's the reason we see that there are not a lot of people who can stick to the fund for a longer period of time. So people who chase the philosophy and process stays for a longer period of time and earns much more higher, because in investing 80% of the time you create 20% of the returns, and 20% of the time you create 80% of the returns. But the biggest problem is that first 80% of the time you have to stick into is the toughest. And then generally we have seen in my 15-20 years of experience that generally the performance chasers are not more philosophy lovers. So I'll more focus on philosophy and process, which is the reason the performance comes, right? It is not that for the performance philosophy and process is made, it is the other way around. So we have an amazing portfolio management team. We have God as the chief result officer, being very spiritual as a company. Me, we have Vibhati, who is the CEO, Hardik, who takes care for the business and the servicing. And we have 2 research heads, Ayushi and Sachi. And we also have Snehal, who is purely into the service managing. So because service is a very integral part of what we want to give as an experience as a PMS. Very fast coming on to philosophy and process, because I know you have come to listen to this on to turn around businesses, and I'll make sure that you take out something great from here. So we have 4 rules which we invest into. So first is investing into businesses with turnaround businesses where the returns are into multiple X and the loss is into percentage. So how it works is that, for example, if there is a business, if we don't find that the business can go into X percentage in 3 to 4 years or 5 years, and if we go wrong, our loss should be not more than 1.2% of the total portfolio of that individual investment. We don't invest into that stock. I'll give you an example. So we invest into turnaround businesses, right? So for example, there are some great companies we can talk for. There are great companies available at some crazy valuation. But here my risk is much higher than the rewards I can go if I go right. And there are no turnaround. Everybody knows this company. It is highly valued. So generally, we don't invest in that type of businesses. We invest into companies where there are longer time consolidation and the value is much higher than the price. So second comes is the value should be much higher than the price. Now, I am not a value investor, so don't mix it within value investing process. But when I'll take you to my process, I'll give you an understanding that why value is higher than the prices works efficiently very well. So it's a very simple that what I'm paying the price, the value should be at least 3 to 4x much higher than what I'm paying the price for the stock, and it's not negotiable for me, right? Because there are, like, I'll give you an example. When we are investing into companies like rather say Asian Paints, Pidilite, or maybe companies like Bazaar Finance, brilliant story, or HDFC Bank for the same. Brilliant story, but now here the value is much comparatively lesser than the new companies which are coming on a turnaround businesses where we are focused on. on, because these are all great names. You don't need a fund manager for. You need that, you know, the 10 names you should invest into it. Why you need a fund manager? But you need a fund manager when they have a different approach for it. Third is our secret sauce is very simple. Pyramiding the profits. If the company is good, we will buy more at a greater valuation. But if the company is bad, we will exit in losses also very efficiently. We have a clear mandate. We don't love companies, we love our clients. So if the company is not performing, though this company could be my favorite or the market favorite, but we will exit. And the company is performing very well, though it could be one of the most, not neglected company in India, still we can give, because number speaks for itself. And the last is most important thing is versus if investing process. So we invest into is investing process. So the companies what are good now and will be, like turnaround has happened now, is more important than the turnaround which can happen after 3 years. For if is that if this turnaround happened, then we will wait for that time to come down to, but it is happening and the turnaround is already into the shape. We like that type of businesses. So I'll give you an example. So a company like, again, it's just for an example basis. A company like a Mahindra who has already done a turnaround versus company like Tata Motors, which is maybe into the verge of getting turnaround. But still doing an losses of maybe 900 or 1000 crore rupees a quarter, and this company started doing profitability and have a lot of great companies in this segment. So this type of companies we love to invest in, Mahindra types rather than Tata Motors types, which could be a turnaround after 3 to 4 years maybe. So just giving an example to give you an understanding that what is the difference between is investing process and if investing process. Let me put something which is fun for you, because we like humor, so we love Bollywood for sure, everyone. So we have this point that Babu Mushai portfolio bada hona chahiye, lamba nahi hona chahiye. So we have a company portfolio of 15 companies, and our top 5 companies are 50% allocation, the next 5 is 30%, and rest 5 is 20%. This happens over the period of 6 to 8 months for the new investor. So one thing we believe that our investing process is extremely strong. कभी संदेह नहीं करना चाहिए. We have an amazing, like आज भी हम गिरे हुए shares नहीं उठाते हैं. So we don't buy the stocks which are killed, which are too much down. We don't invest bottom fishing process. We don't believe into it, because from 10 companies we speak one company which has done good, but 9 companies die around, and we don't like mortality ratio in our portfolio. Second is relationship wale column mein wealth creator. We are so proud that we are wealth creator out of it. There's second thing, this dialogue from Damang is investment se dar nahi lagta sahib, loss se dar lagta hai. So we take care that our portfolio risk management system is so strong that we are into the world where we put phone screens, the tempered glass screen. Still we have Gorilla Glass, but we don't talk about risk management, but more about our investing in our investing process. But our risk management system is extremely robust. And then like 3 Idiots, I love this dialogue. Returns के पीछे मत भागो, discipline बनो, discipline. I think so profits तो साला जग मार के पीछे आएगा. Not the right word to speak, but it's the dialogue. So just we put it onto the point that it is so connecting onto investment philosophy to whatever is happening around. It could be football, it could be Bollywood, or it could be cricket. So let me come to our stock investing process. Is we have endeavored 3 P's, that is price, profits, and people. Many people would have known me, would have gone through so much of time with this process, and you won't believe this process is over the period of time getting more stronger and stronger. This is like an iPhone. You feel that iPhone is same, but the internal of software of the iPhone is getting more stronger and stronger. The same happens with our process. You feel the name is triple P only, but it gets stronger day by day. So price, we see 2 factors in price, and that's the most important thing. One is that it should be having a longer years of consolidation, maybe a decade or it, nothing happening into the stock for the over the period of time. This is one. And if we like that stock, the second is that we decide exit into price wise, the first. So stock should be at all-time high. We decide after a longer period of consolidation. Guys, you would be surprised that we buy only all-time high stocks. Now you will say that, Rohan, you're buying an all-time high stock. Rohan, you will be going crazy. You're buying it high, you should buy at bottom. I agree. But then I'm buying stocks which have not performed from last decade. and I'm buying when the business is just starting turnaround. So why this stock has not performed from a decade could be a story of business management across 50 other examples. So I would love to buy these stocks when the turnaround happens, and the first indication of turnaround is the all-time high price, and then deciding all-time high exit, all exit also, not on the upper scale but on the down scale. The second is profits. Now, profits are a very integral part. So first we see the management should have a turnaround business into the business, why it has not performed from 10 years or 15 years, and why it has started to start performing it from now. And the most important part is that the stock should do its all-time high profitability. So the PAT of the stock should be at all-time high, the price at all-time high, the PAT at all-time high. And the third is that the business should be turned around. Now we have two funds. One is Wealth Mantra Fund and Growth Mantra Fund. Wealth Mantra, we buy leaders of the business, that is gorillas, and in Growth Mantra we buy monkeys, which can turn gorilla tomorrow. And people, then what we do, we don't buy any companies without meeting the management of the company. We roughly meet nearly about 6 to 7 management in a fortnight, and we make sure that without meeting the management, we will not invest into the companies. So we meet management, we meet dealers, we meet employees, we get the skin in the game, and then only we invest into the companies. So there are 3 philosophies we strongly believe in, and that is these three. So there are 3 major stops of stock selection. First is, as I told, that stock should be at all-time high after a very long consolidation. I'll give you nearly about 10 examples to make and you understand that how this process works. Second is stock price should be at all-time high, and third should be a great business, turnaround business. So this is 3. So let me take you an example of 9 turnaround business stories. I'll not put the name because of the compliance reasons, but I'm sure if you are in the market person, you will know which stocks I'm talking for. But of course I could not name it, but of course I would tag these companies as the tag of what this company does over about. So please be with me, because this is going to make a huge difference on how we do the stock selection process, and how we are very unique to a lot of PMSs, or maybe all PMSs across India and the world. So first is, let me talk about India's largest bank. If you can see, this is the price for the first rule is that the stock should be all-time high after a huge consolidation. So this stock, let me put the pointer to make the things more, so if you see the stock, nearly over from 2008, the stock didn't do anything. So it's like 14 years, the stock was in that same range. Now, from 2021, the stock has started, inching up better. Now, this is an, yearly chart. What I'm talking, all the charts, what will be shown will be yearly charts. And why I'm showing you charts, it's not that it's a technical version of it, but generally charts are shown to see the price patterns of it. That's it. So this is India's largest bank, 14 years, nothing has happened. Nobody wanted this stock. This company was available at 0.10 times of its book value. Nobody was interested to invest into that thing. But what happened into the profit side? So if you see, very surprisingly, 11,000 crore was 2011 profit. Roughly in 2007, it was nearly about 5 to 6,000 crores of profit. From 2011, 5,000 crores profit to 2011, 11,000 crore profit. TTM profit is now 43,000 crore profit. So 2008, this company was available at 5 to 6,000 profit. The profit is nearly about 9x higher, 8 to 9x, and the stock was available at the same price. Now, what has happened with this bank was very interesting. All the NPAs were settled. All the companies merger happened. All the worst thing came into the picture, and nothing worse could go, because everything was settled very well, and it was just waiting for the economy to do better. And the management changed, the team changed, the team came more professional, they came more tech, and everything happened into the right picture. So if you see over here in 2017-18, there was a huge hit on the balance sheet, but then you see how recovery happened, and from there the stock happened to be double after the the pickup of it, but looking forward for more major things. Now, what has happened also is, in last 10 years, the most celebrated private bank was 3x in returns more than this bank. But today, in last 2 years, 1.5 years, like now 2 years in a calendar year, This has done much more better than the most celebrated bank. So that's how the value migration happens from a turnaround business to a major business to a turnaround business. So this is one of the example. Now, this is very interesting, is India's largest infra play. Nobody will deny that, India's infrastructure is going to be very good in last 10 years. I'm residing in a city called Surat. If you have been to Surat, you will know what I'm talking for infrastructure, and that is what is going to happen in India. We travel across the world. I've been to Europe lately. Not a single construction happens in Europe. And if you see in India, not a single area is without construction. And this infra play, this is the largest infra play. But guys, you will be surprised. 15 years this stock didn't perform. 15, 1-5. So somebody tells you that 10 साल में पैसा बन जाता है, हर एक stock में ऐसा नहीं होता है. 15 years, and this is largest infra play I'm talking. I'm not talking for a small company. This is a Nifty 50 company, right? And it was Nifty 50 in 2008 also, and it's Nifty 50 in 2022 also. But 15 years, nothing happened. It started doing all-time high, and this company in 2011 it was 4,500 crore profit. In 2007-8 it was somewhere around 3,500 crore profit to nearly about 12,000 crore profit, and the price is same. Now, what has happened to this is that this company was doing good. There was a change in management. Now the management has come more stronger. There were certain areas where, the business was not happening very well. There are certain areas of the business where they were doing losses. So they've cut down that business, sold off that business. Now management is only focusing on, taking more profitability around. If you see, the profit is at all-time high. Now, secondly, what has happened is that India's story of growth has started. So people will spend more on the infra play, and most of the infra competition has gone out of the business from 2008 to 2016 into the worst time of infra play. And also the capex story has started. So this company gets the biggest leverage, being one of the most ideal company or preferred company for infrastructure development. It could be roads, bridges, buildings, etc., and a lot of other turnkey projects. So now can you imagine, this company is available at 12,000 crore. 15 years, the stock price has been same, but the profitability has gone nearly about 5 to 6x more higher, and it has just started. It will go more higher and higher. So there are a lot of questions which people ask me, Rohan, at this point of market, can we invest? At this point of time, can we invest? And I say that, boss, I am investing into something which is not worked already for 15 years, and the business turnaround has just started. So if you think that Nifty and this stock will be related, then this stock should have performed much higher in last from 2008, when Nifty was 6,000 to today nearly about 19,000 of Nifty. But the stock is same. The stock has not gone 3x from that price. So if the stock has not grown, why we are comparing Nifty and the stock together? So we are investing into certain things which are extremely value. So that is what I was telling you in the initial time of presentation. It is value versus price. So value should be much higher than the price what we have invested into. So this is the fertilizer company. You'll be surprised, from 1994. So that is how many years we're talking for? Nearly about, say 22 plus 6, 26 years, this company has not performed. And if you see the fertilizer sector also, nothing has happened into fertilizer sector from last 20, 25 years. Now you see there has been momentum into fertilizer, which is coming up. The prices have been rising. Government is too curious to make fertilizer company more better. A lot of things is happening into fertilizer company. And this company, if you see the profitability, will go gaga. So this company in 2011 was making 245 crores of profit to today nearly about 1,000 crore of profit. And if you see 2006-7, where I'm talking from 1994, this company was not in 10 crores of profit. So you're getting a price of 1999 or 1994, that is 10 to 15 crores of profit, to today 100 crores of profit, but the price is eventually same. So now if you can say from here, the price would have gone up, I agree. But if you see on a larger frame scale, the price has not done anything. And you won't believe, every turnaround business happens by the same story. Same story we picked up chemicals in 2017-18, where 20 years chemicals didn't do anything. SRF, Aarti Industry, Navin Fluorine, 15 years were available at the same valuation. And then you see in 6 to 7 years, the stock went nearly about from 10 to 15x. So this story happens around in all the sectors. And this is one of the company I was talking for. Now, this is again an interesting business. It's India's leading shipping company. And these companies this is a 2008 price. Nothing happened. So nearly about 2008, 14 years, there's been nothing happened. The stock started to put all-time high. We meet the management of the company, and management of the companies has totally turned around the business, got a good time to discover that where they were going wrong and where they are not, getting a valuation for. You'll be surprised, guys. This companies, what I'm talking for, are available at below 10 times of valuation, P, below 10 times of price earning. Means this fertilizer company is available at 2 times. This company was available at 5-6 times, and with EPS of maybe 200-300. So, and then the same thing what has happened into the let me show you the business from 400 crores. So I'm taking 2011 balance sheet and I'm showing 2008 to consolidation. So we can discount that by 2008, this profit would be somewhere around 250 to 300 crores to 1620 crores. Now the surprising factor over here, all these companies, that the company profitability, what they were making in year, now has turned into the quarterly profitability of the company. So I'll tell you, this a fertilizer company which was making a 300 crores to 200 crores of profitability a year, now is making 300 crores of profitability a quarter. And that's happening with the changeover of the business. And that's very, what we say, meaty. That is where the whole crux happens. So the same company, you see the freight is going better, the the logistic business, and we had not seen manufacturing to grow in last 10 years pre-COVID, and service industry was taking care of our whole GDP. And now you see the manufacturing is doing good, and once the manufacturing starts doing good, automatically companies like logistics, shipping takes its own place. So shipping company, one of them, which has done which have done which has been a great value out of it. And this company, you will be surprised, this company, when we bought this company, was available to its book value. So can you imagine, there's no valuation. This company, which is doing business from last 50 years, is available at book value. Book value, I'm talking, gentlemen. So that is what this turnaround business happens. This is India's leading defense manufacturer. Again, company, if you see from nearly about 2006, nothing has happened into the company. It is into auto, it is coming into defense. And that's where, if you see the profitability of the company from 300 crores to 1000 crores to TTM, it's a manufacturing company, so it can go up and down, but somewhere around nearly over 3 to 4x profitability, where the price is near about the same. So again, this is a great change into the business, where 70% of the business came from automobile. Now it is going to go defense, and the machines and the products now they have for the defense is one of the most unique, not in India, but in the world, and extremely focused on defense. And the same thing, if you see defense, a lot of spending is coming from government on defense side, and that's how this company is again a value over the price. Then it is India's logistic business. Again, if you see from last 10 to 15 years, the stock has done nothing. This is the India's largest and leading logistic business. I'm sure we all get a lot of parcels at our home, buying shopping things, and how this all shopping happens is by with logistic. Whatever logistic, it can happen, but without logistic, nothing can happen. And this company, when we bought it, was available at 5 times of its valuation. When we saw this business of the company, we were shocked that why this company is available at so throwaway valuation, but nobody was seeing the logistic business. And that's where, if you see the profitability of the company, you will be shocked. From 2010, it was 176 crores of profit to today 1100 crores of profit. The stock has nearly about 8 times of profitability. But and also see this, it's not only the top line which is bottom line which is rising, but if you see the top line also from 28 or maybe 3000 crores to nearly about 22,000 crores of top line has changed. And that's what we are going to see in the price. Once it is going to be discovered, it is going to be multiple folds, and that's where you are investing in the starting of the turnaround to make the most out of it. Then it is leaders into steel pipes and tubes. This is a huge moat. This is a company which has nearly about 55% market share of steel pipes and tubes in oil. Again, 15 years, nothing has happened into the stock. And we have seen consistent promoter buying the stock very well. And if you see the profitability of the company from 300 crores to 150, this was to one extra income, 150 crores to 543 crores of the profitability. Again, a 4 to 5x, profitability, where the price is nearly about the same. So that's where the unique factor comes into the picture, where you're finding a good business, turnaround business, but a moat. And in this 13-14 years, this company has done everything to change its own business model. Now you can say that, Rohan, why we are buying at all-time high? We should buy it at bottom if you know the business. Yes, we can do that. But from 10 to 15 stories, very few company actually does an all-time high and actually does a turnaround. We as fund managers, we don't have privilege to buy all the companies because we buy only 15 companies. But if you want to buy specific, specific is terrific. And I don't think so. More than 15 companies, you can outperform very heavily into your portfolio. And that's where, turnaround happens. So now you say that Rohan, turnarounds happens on the first day. No, it takes time. It takes 2 to 3 years. When we started investing into chemical companies, it took 1-2 years of gestation period. And after that, it started its move. When we invested into logistic business, it took its own time, because market will discover it. Market will give P expansion to it. Market will see that 2-3 quarters it performs onto that segment or not. And then, of course, it will give its own expansion. And then we will see the journey to start with. As I told, onto the profitability, this is leader into lead production and recycling. This is one of the most sustainable business example which we can talk for. We just had recently meeting with the management, very unique business modeling which is coming on. Again, nearly about 10 to 10 years of non-performance into the price wise. And if you see, from 2011, 15 crores of bottom line to 177 crores of bottom line, more than 10x profitability came ahead with the same pricing. So this is one of the example, again, with top line from 200 crores to nearly about 2500 crores, again at 10x. And now the pricing has started more better. Now the the capex what they have made, the results are going to start. And that now the recycling to recycling businesses got a view on, people are seeing to it, and that's where the whole business is starting coming on to pure turnaround business. So you can tell me, Rohan, have you invested in all the companies? We have invested in 70 companies, what we are talking, 70% of the companies what we are talking for. There are certain examples also I can lead to it. But yeah, if you're investing in any of the companies, of course, I have not taken name, but do not do without a recommendation of your financial manager or finance manager of your financial planner. And the last but not the least, this is an amazing company. Now, a retail company I love, we love highest spending after food in the India is on clothes and accessories. Now, this business is one of the top retail company, maybe like, from 20, 30, 30, 40, 50 years, this company works more than 100. This was the most preferred textile company in India in 1990s to 2000, but certainly the management was not much to focus. And now the whole turnaround is happening. So now all the retail industry, if you see from Maniavas to Go Colors to Trend, they are available at from 70 times to 200 times. But this company is available at 8 times to 9 times of valuation, with 3 business into the picture. One is, of course, the textile and retail business, that is clothing. Second is the FMCG brand, and third is amazing fast real estate business they are doing in specifically into Mumbai. Now, when we met the management, we were very skeptical about the promoter, and we were very happy to know that promoter is extremely now focused into the company, and that's how the turnaround is happening. Now, we will say, Rohan, whose promoter or whose company will say that the company is not working? You're right. It is very valid question. As Warren Buffett said that, you should not ask a barber for a haircut. And I totally agree to it. But then we only don't go forward for the sake of the management. It has to compile in the numbers. So numbers could be, the price, and the second could be profitability, because anybody can, lie, companies think, but they cannot lie the numbers for a long period of time. And that's what you're seen in 2011. This company was at 55 crores of profitability. with 2021 not great, it was sustaining, it was doing okay, and now you see it is at 610 crores of profitability, 10x of profitability with this nearly about same price, and something great coming into the company with lot of new structural changes happening into the business. This company cut nearly about 400 crores of expenses which they did from 2014 to 18 and just wanted to curtail it. So if only 400 crores comes into the bottom line, or automatically this company's re-rating happens, and that's where the valuation happens. This company, again, it's an all-time high. Very interesting business model and very interesting business to look forward for. Again, available at below 10 P. So if you ask me, Ron, you see P is a very important factor. No, but then we don't want to invest into some exorbitant valuation also, where the value is not very much higher than the price what we invest for. So how this process also helps in not investing into companies which are not going to work is also a very big important point. So this is in India's digital bank, which everybody was bullish. I use it very high. I'm sure we all use it. One of the biggest learning I had in my life in last 10 years is that it is not necessary that the product you use, the company you should invest in. It all depends on that what valuation you are entering into. So this company was been very hyped and everybody wanted to invest into this company. The stock is nearly about 60 to 70% down from its IPO. But why we didn't invest into this company is a story. It's not an all-time high stock, but the cup also and making it nearly about 2,700 crore of losses. Now, how you can invest because it doesn't come into the portfolio. Now, there's one more story. There's huge fashion brand. My wife loves it. Everybody loves it. All ladies, if you ask, they're fan of it. But if you see the stock did an all-time high, which will not take for a shorter period of time, but the stock lynching up down, and then the stock profitability also came very, very less and available at some exorbitant valuation. So my mentor says this very well is that हर मोहब्बत की उम्र होती है और हर एक स्टॉक का एक वैल्यूएशन होता है. उसके ऊपर जाओगे तो आपको वैल्यू नहीं मिलेगा, आपको रिस्क मिलेगा. But we are onto the point where we want value rather than risk in money. So that doesn't mean that all the stocks we invest always works. There are certain things which doesn't work also, because nobody can 100% be right all the time. So that is the reason we do this, and that is exits before we enter. Why exits are very important is that if anything wrong happens to my investment, not into the only nature of buying a stock when we bought, but also in the nature when the stock has already done very good, because the magic lies in pivot, right? So I'll give you an anecdote. We had invested in a company which is Laurus Labs. We invested at a very good valuation, a very, very good price of nearly 150 rupees, and then the stock went nearly over 600 rupees. And then the API prices started drafting down, and the price also started drifting down. We sold somewhere around 450, 460. I would be 10% up and down to my price. And today the stock is already down much, but what I've saved is that 1 year of that pain period, and the stock what we had reinvested in the place of that has done much better than the stock we would have hold Laurus Lab. Good company, but that doesn't mean that you should hold if it is not doing good. Every stock has 3 exit prices, exit time. One is the price, what price we will exit. Second is what happens into business that we will exit out the business. And third is that what is the non-performance. If the stock doesn't perform, what we will do out of it. So there is 3 already structured thing. It's like wearing a seat belt. We don't wear a seat belt when the accident happens. We wear seat belt when the car starts. The same exact thing we do at investing process. We decide when we will exit before ever entering the stock. So we are so clear that we can go wrong. Second, if we go wrong, what are the things can be done? So this is exit before entry. And third, very important thing, which we believe at Turtle, is investing into human-friendly investments. Now, for somebody, it could not be a great reason, but for somebody, it could be an amazing reason. We believe that, these are the companies we'll not invest in. Animal killing companies, we don't invest in liquor and tobacco. And we do only invest into sustainable business, which is ESG, which is environmental, social, and governance. So what happens is that in US or you see in the worldwide, it is a very important factor to invest in this type of companies. And we believe that this trend is going to come where this type of companies are going to get more valuation which is out of this, out of animal killing, liquor, tobacco, and which are sustainable will get more valuation to the peer company. And that's where we are very inclined, because we don't want our kids to consume the things which are not right. So why you invest into that company? This companies could be great, no problem to it, but we have made a point that we will not invest into it. For somebody it could be great. For the people who feels that it's not that great idea, I'll tell you a point to it. So you take it like this, that a company was decided not to invest in this type of companies are companies who are thinking about profits. That these companies are not only thinking of making profits in any Tom, Dick, Harry way. They want to invest into companies which are more sustainable and doing good for the humanity or the universe. So this is also very important for me, and that's the reason I started with my first quote is that thinking beyond profits, because we are all into profitability, but the companies who are going to do better for a longer period of time are the companies which are going to be sustainable. So that's a very important factor for us. And then comes the most important part is performance. You say, Rohan, ये सब बात तो हो गई, how much returns you give, because I'm interested, but returns are 10% of the total pitch what I'm going to do. And that's how, see, we have outperformed the markets, we have done very well, but this outperformance has happened when you stay for a longer period of time, right? So there are 1-2 stocks who has done huge out of us, and that stock, that 1 month or 2 months are most important for them to do amazing. Like, for example, I'll give you an example. We have invested in a company called SRF. Today, the total volatility of SRF is equal to the price what we have invested in SRF. So that's how the value creation happens. But it doesn't happen for 1-2 periods. Years period. It happens for 3 years. And why I have told you my process is because when I pick a stock, you know why he's picking. And when I don't pick a stock, and for example, if I'm emotionally, for every investment, a fund manager, the biggest problem is his versus him versus him. वो है ना, कार्तिक वर्सेस कार्तिक, वैसे ही होता है कि my emotion versus my good emotions versus my bad emotions. If I make the process so strong that it is clearly accountable, then you as an investor know that why I'm doing. Either you are convinced with me, either you're not with me. And not with me, I mean, is my process. And that's how it works magically. So in Growth Mantra Fund, of course, because the investment is done in monkeys, small companies which are going to be gorillas, which is we have done nearly about 27 times. This is pre-tax, guys. Wealth Mantra, we have done 21%, where we have invested into stable businesses. That only doesn't mean we are investing in large cap. We have small cap also, we have mid cap also. Both funds are multi-cap funds, and where Nifty benchmark 500 as we have double out very largely. But again, I'm telling, this is when you are investing for a longer period of time, not for a shorter period of time. Next is we have products what we talked for. We have Wealth Mantra, PMS fund, we have Growth Mantra. The first investor who are not much risk adverse, we generally prefer for them to invest into Wealth Mantra, because they are very mature businesses, them businesses which are more onto leader. And if you are like pro and you want some flavor, of course Growth Mantra could be there. We don't have any replica of stock in any of the portfolio. Second is portfolio assessment. We do, if you have your portfolio, give it to us, we will give you a report that why this portfolio, what to trim, what to add, and that's how we can do. And then of course we have family office management services. If your family is total value of equity investment is more than 10 crores, we have a person connect to it, and we give a family office management or detailed services, which we can talk later about. So I've just given you a difference between Wealth Mantra and Growth Mantra fund, because there are a lot of people who will ask. So core purpose is 13 years, 10x returns. Here it is 10x into 10 years. This is my endeavor, the 25% plus C.A.G.R. Here we invest in gorillas. Here we invest in turnaround monkeys. Consistent in mature. These are the companies. Deep value with high growth. Risk profile is for moderate risk. Here the risk profile is high risk. Fund selection criteria is long-term compounding wealth creation. Here is fast growth and willing to take calculated risk companies. Overlapping of stocks doesn't happen over here. It's all no. And we have the most amazing in the last part of the process icon is the fees, because a lot of people ask what is the fees, what is the price you're paying to it. And the price what we are paying to it is that our 1 crore and 1 crore, we have the most unique model of fees is that the management fees comes to 1%, which is taken quarterly 0.25%, that comprises of 1% of the value, and 10% of the profit sharing happens at the end of the contract. So now, for example, if you have invested with me for a longer period of time, I'll take profit sharing with you at the end of when you are going to end with me. It could be 3 years, 5 years, 10 years, 15 years, 20 years, 25 years, whatever it could be. And whatever the amount will be of that profit sharing and whatever the fees I have taken, the fees will be minus from the profit sharing, and that only amount I'm going to take out of it. I'll give an example. If somebody is investing 1 crore with me and after 10 years this goes to let us say 10 crores, just an example, and 9 crore is 9 crore is the profitability. So generally I'll take 90 lakh rupees of profit from it, from 10%. And let us say I have charged roughly 30 lakh rupees of fees, just an example, all random numbers of fees in next 10 years. Then I will only take net at the end 60 lakh rupees, because that first 30 lakh I will already taken. Why we are doing this? Because if you are showing longevity with us, I'm showing longevity that I will take returns after the end of it. Secondly, when you take profit booking at every year, it's a huge hit on the portfolio. You have to pay tax, you have to pay GST, you have to sell stocks, and compounding doesn't work. And 1% difference on compounding over 10 period of 10 years of time is a huge number, which we cannot imagine for. So you show longevity as a fund manager, I show longevity. I take 1% because of the managing and servicing cost. My real earning is if you are iron. And that's what we are showing the skin in the game with you guys. So we have also accolades. We are in the top fund manager, top performing funds. We have been to Forbes, coming into TV. We do a very unique thing, which we take most of companies to the management and the plants. Now, why we do is because we also want to know that that what type of companies we have invested into. So we have taken people to the plants, and if it is an IT service company or a service company, we do a Zoom call with all the clients that can deep dive into the management of the company, can see the company. So there is a company where we invested DLS. So we had a con call with the management, and the client investor can come and participate and ask questions to the CEO or the managing director of the company and know their visions. So this is how the skin in the game also happens into the picture. So it's not only one side, but it's so when you are investing with a fund manager, and specifically the fund manager, it's a relationship like a spouse. Eventually it has to grow from time to time, because there will be ups, there will be downs, but over the period of time we want to win with a lot of love and respect. So that's it from me, guys. I hope I have created value, and I'm sure that our vision is to create a lot of wealth for all of our investors, and that's we don't have second profession or second love for anything else than this. And that's how we are here. So I hope, Akshara, I had done, I've done the justice with the time. And thank you for, I think so you've given me a 30-40 minutes of time slot. So yeah, I'm done with it.
Yeah.
Thank you.
Thank you, Rohan, for that. It was a good, knowledgeable session to take it. And of course, to talk about the presentation, we come as audience, we were completely impressed with it. I was impressed with the way you just took it a bit different way of bringing Bollywood inside it. So yeah, that was really good. To start off with, I must say that 2019 was birth of, 2012 was the birth of Turtle Wealth, and 2019 was the SEBI licensed one. So post which we had to face COVID, which was a national fear, and followed by this recession, which is going on. So how do you face it? Because
yeah, I think so. Everything comes at its own time. We were honestly onto the page of never, managing people's money, but then, our people around said that you had a unique way of investing into money. Why don't you create value for people? And that's the reason we were a bit late for getting a license by 2019. And I think so. Every situation in market gives you a great learning, that how you make your system more robust and what you learned out of it. So yeah, I think so. Every ups and downs, and we all learn from bad times. Honestly, we make mistakes in good times and we learn from bad times. So it's like yin yang. We have learned a great thing, and now with all the experience. So what we have done in last 10 years, we are more mature, equipped, and more agile of what we are doing. So the clients are and investors are going to get more benefit than what it had before 10 years.
Okay, thank you, Rohan, for that. Followed by this question, being a boutique PMS firm and relatively new to market, how do you match the research capability of big giants in the market? We have big bulls in the market as well. So how is your research team and how does the process work?
Yeah, so what we have crafted is, of course, there are people. So the story goes with, David versus Goliath. Goliath was this big, huge guy, 8 feet tall, and it was all the armor. And David told that, I'm going to fight with Goliath. And David had this amazing skill of, having slingshot. He didn't go with armor and tell that, no, I will fight with armor. So we know that there are huge, gigantic companies, and we really respect them, what they have done over the period of time. But we have our unique skills, what I have presented. So I think so it's research and the philosophy which makes us very much different. And what we have done is that we have understood, reading 400 years of history of finance in the world, that the biggest problem comes is when your direct emotion comes into the market. So what we have crafted is that can we do that 90 to 95% of decision making are not emotional. It is purely a process based. So process wins over anything else. We say to this manufacturing guys, but it happens in the service industry and the research industry also. So yeah, I'll tell you a bit of process, how it works. Like first the stock is screened out. Then it goes to basic screening of understanding the business. If we like the business, the research analyst sees deep dive into the business. And then if we really love it and it comes into the process, then we meet the management, we talk with them, we see the facilities, we see the ingredient of the thing, we go to skin in the game, and then eventually we come and buy the stock into the portfolio.
Okay, that's great. Because when you talk about this emotional, customer emotional thing, I must say that the new age companies hasn't done that well in 2021, because as expected, because it has quite underperformed. So how do you value? Because when you talk about turnaround, probably they're not doing now. Yeah. So their Burj Khalifa is yet to start. So how do you value them?
Yeah, so see, these are all great equipped companies, but they have come with some unbelievable valuation, right? So now when I see Nykaa at 900 times of valuation, I can't buy it, right? Like I can't buy it. Like my wife doesn't allow me. If I go for 20 rupees of whole kelas, that is banana, then how can I buy something at 900 times of value, which can be great company? I can agree to it, right? So my point is that we don't focus into that when the turnaround will happen. We are an easy investor. But when it will happen, we will see to it, because we are purely a bottom-up company, picking up company into it. We don't see too many companies because you have to invest a lot of times in picking up the company. But I would be very interested if one or two of the companies really does good profitability and really have a great corporate governance to look for, because the startup world is very different to the live public world. It's very different. Stock going 60-70% down.
Okay, thank you. Being a woman, if someone is going to say Nykaa is not going to do well, so that's not acceptable yet, though. So moving on, I got a question from Vinod Shanoy. Because he posted his question even before the webinar could start. So I just want to give him the first preference. Wish to know the outlook on gold as the investment option, considering the uncertainties in the geopolitical disturbances and Chinese economic situation. This is what his question is.
Yeah. So, Vinod, whatever understanding I have with gold, I will tell you on that level. I think so gold is one of the only asset which outperforms when the world has done not great or world is into problem. So as such, as an Indian family, if you are an Indian family, you already have good gold proportion into your total wealth. So yeah, if somebody can say that you can have 10% of the gold always, and that, well, honestly, it doesn't serve any purpose. If you see, because gold has done somewhere around 7 to 8% of wealth creation, whereas Titan, who sells gold, has done more than 25% of wealth creation. Though I'm not vouching or canvassing Titan, but that's what I feel, that it's good, but I don't think so it's a part of wealth creation process. But yeah, if there is nothing, so I find that gold is a happy note for a lady. So whenever you want to make your spouse happy, take her to Tanishq or a store where always they are happy to go forward for it. And with happiness, it comes 7% of the value. It is happiness for us. Rest, I don't think so. Gold is a great asset to invest into it.
Okay, thank you, Rohan. And one more question is that, of course, talking about the macros, there are big layoffs which is happening, and India is marching towards its 3-month high unemployment rate, which is 8%. So, how do you think this is going to affect Indian markets?
Yeah. So first is layoff. Akshara, we have a client who works in Google. So I have questioned this to him, and he told that, Rohan, that if Google today lays off 80% of the total manpower, it still prints $190 billion of money. And he gave this amazing experience to me with that. Twitter had done 70% of layoff. Have you find any problem to use Twitter? And I told no. And that's where he told that, this all companies are much more ahead of the time we think. So see, they had recruited also some humongous number of people, manpower in last 6 to 7 years. So I feel so what happens in this type of industries are that when the slowdown happens, the only way to maintain the revenues is to lay off the employees, because that profitability, that spending adds into the revenue, and that the profitability gets stable out of it. So I don't think so that's a big concern for me for a layoff, because see, today Google has 160,000 people, and if they're laying off maybe 16,000 people also, that's 10% of their manpower, which I don't think so that's a big issue. Coming to the Indian point, I think so India is one of the most better placed country in the world today, with the demographics, with geopolitical, with governance, with the business, and with the population. So, and if you see the worldwide, it's the only India at 7.8 specifically. So we are very, very proud that we can say that next 10 years is India's years.
Okay, so you're trying to say that AI is much better than a manpower, because without manpower, if a Google can still run. So I think AI has taken over. So moving on to the next question with NR, who's NR, what gives you a confidence that the stocks are just breaking after 12 years of consolidation that will perform a significant aggressive rate relative to benchmark and other firms? So what gives you that confidence?
Yeah, so one is that we have seen in last 50 years that this are all the companies which have done outperform the markets. One is our back test. And second is what we have always seen is that there is where the value happens over there. So value will always give you that X multiples returns, not for for the first quarter, 2 quarters, but over the 2 to 3 years of time. So that's where we have gone. And of course, we are not blind that only it does an all-time high the stock. No, we don't do, because if you buy in a month, but we don't buy all of it. It has to be management, it has to be profitability, it has to be business, and then only we get sink into it.
Okay, thank you, Rohan. So we'll come to the last question for the day because of time constraint. So okay. We have like 15 days less to the next year, 2020-23. So what are your message for the investors, and how do you see Turtle Wealth in spite of experts giving 2023 is not going to be as very good as expected?
So I'm not a soothsayer. I don't know what is going to be. Nobody knows. Everybody plays a dart. Everybody tells that nobody predicted COVID for sure, and somebody did. I'm not sure who was there. So I don't know. But one thing I can say is, every year there is opportunities which happens in market. And what we are seeing is that we are endeavored to be one of the most trusted and leading asset management company in India by 2030. And our products and services are going to take care of people whose actual need is and what they are looking forward for. So I believe an investor sees three things. One is the genuineness and the transparency, sees the liquidity, and third, they see the risk management and services. I think so. All three things we are excelled in. So that's what 2023 is, with a lot of opportunities and a lot of growth trajectories. Honestly, I've always learned that being optimistic always creates a lot of wealth. Pessimistic are always appreciated, but optimistic are somebody who makes a lot of money.
True, 100%, and I go with that personally. So, due to time constraint, I'm not able to take every other questions, which is on the audience poll as well. So, I request the audience to post the questions to PMS Bazaar so that I could get them answered. Rohan, please, I'll be sending you a set of questions post this. So, I just mean we need some of your time to answer each one's question. Thank you, and thank you for the time. Thank you for your patience as well as giving us a different vision